Welcome back to the channel. I'm Algabot, and today we're taking an educational look at an expert advisor for MetaTrader 5 called Permutation Entropy Regime Trend. This is a trend-following pullback strategy with an unusual twist. Instead of jumping into every dip, it first asks a simple statistical question. Is the recent price path genuinely ordered, or is it just random noise? To answer that, it uses a complexity measure called permutation entropy, paired with a moving average baseline. By the end of this video, you'll understand exactly how that entropy gate works and how the entries and exits are built. Let's get started. Let's start with the big picture. Permutation entropy regime trend is a trend-following, pullback continuation strategy. That means it doesn't try to catch tops and bottoms. Instead, it waits for an existing trend, then looks to join it on a small pause or dip. What makes this approach distinctive is the filter sitting in front of every trade. That filter is the Bandt-Pompa permutation entropy. It's a statistic borrowed from complexity science that measures how ordered or how random a sequence is. Here it's applied to the recent closing prices. The clever part is that it looks only at the rank order, or the ordinal shape, of consecutive closes, not at the size of the moves. For a group of 3 consecutive prices, there are 6 possible up and down shapes. The strategy slides a window over the recent closes, counts how often each of those 6 shapes appears, and converts those frequencies into a single number between 0 and 1. A value near 1 means every shape is equally likely, so the path looks random or choppy. A lower value means a few shapes dominate, which points to an ordered, trending path. Because it's based purely on rank order, this measure is invariant to scale and to volatility. That's why a single threshold can be meaningful across foreign exchange majors, gold, indices, and crypto, and across both quiet and busy market conditions. Once the entropy confirms an ordered regime, the strategy takes a classic, low-risk style of entry, a with-trend pullback that reclaims an exponential moving average baseline. It buys a dip that climbs back above a rising baseline, and it looks to sell a bounce that falls back below a declining baseline. Who is this design suited for, in an educational sense? It's aimed at traders who like systematic, rules-based trend following, and who appreciate a statistical filter that stands aside when conditions look like a random walk. The time frame isn't hard-coded, but the concept was built with the 15-minute to 1-hour charts of major pairs and gold in mind. As always, this is educational information only, and trading always carries the risk of loss. Now let's walk through the mechanics step by step. Everything runs on the close of each bar, so the strategy is non-repainting. The currently forming bar is used only to detect that a new bar has opened. Every actual decision uses closed bars. The first thing the strategy calculates on each new bar is the normalized permutation entropy over the last window of closed bars. By default, that window is 40 bars. The result is compared against a threshold, which defaults to 0.90. If the entropy sits at or above that threshold, the path is considered too random, and the strategy simply stands aside and takes no new trade. Only when the entropy is below the threshold does the market count as ordered enough to act. Next comes the trend check. The strategy reads an exponential moving average with a default period of 30 and compares its current value to its value 1 bar earlier. If the average is rising, only long setups are allowed. If it's falling, only short setups are allowed. Then it looks for the pullback reclaim. For a long, the prior close must have dipped down to or below the baseline, and then the latest close must climb back above it. That's a dip into the moving average that gets reclaimed while the trend points up. For a short, the mirror image applies. The prior close pops up to or above the baseline, and then the latest close falls back below it while the trend points down. When those conditions line up, the strategy signals an entry and places a market order. Risk is defined using the average true range. The stop loss is set at the entry minus, or plus, the ATR times a multiplier that defaults to 1.8. The take profit is set at the ATR times a multiplier that defaults to 3.0. So the target is deliberately wider than the stop. There are 2 more layers. A cool down, defaulting to 2 bars, spaces entries out to avoid churning on borderline reclaims. And there's a regime invalidation exit. If a trade is open and the entropy climbs back above the threshold plus an extra buffer, defaulting to 0.04, the ordered thesis is considered gone and the position is closed. Otherwise, The stop loss and take profit manage the trade. Let's read through the core of the MetaEditor code on screen. At the top are the inputs. PeWindow is the number of closed bars the entropy is measured over, defaulting to 40. PeThreshold, at 0.90, is the ordered regime ceiling. The strategy only trades when entropy is below it. Exit P buffer is the extra entropy that forces an open trade to close. EMA period sets the baseline. ATR period sizes the risk, and SlAtrMult and TpAtrMult turn the average true range into the stop loss and take profit distances. Just below that, notice the gate. The single line that checks if entropy is at or above the threshold returns immediately, meaning no new trade is considered when the path looks random. Only if we pass that gate does the code compute whether the moving average is trending up or down. Now the two signal blocks. The long reclaim flag is true when the trend is up, the prior close was at or below the previous baseline, and the current close is back above the baseline. When that fires, the buy branch reads the ask price, sets the stop below entry by the ATR times its multiplier, sets the take profit above entry by the ATR times its multiplier, and calls trade.buy. The short reclaim flag is the mirror. The trend is down, the prior close was at or above the baseline, and the current close has fallen back below it. That branch reads the bid price, places the stop above entry, the take profit below entry, and calls trade.sell. Both sides share the same logic, just reflected in direction. Let's bring it all together on this illustration. Across the top you can see the candles and the blue EMA baseline. In the panel below is the normalized permutation entropy, riding between 0 and 1. The dashed line is the threshold at 0.90. When entropy sits in the green ordered band below that line, the strategy is allowed to trade. When it rises into the red band above it, the path is treated as random and the strategy stands aside. Look at the first few candles on the left. Price is stepping higher and the blue baseline is gently rising, so the trend is pointing up. At the same time, notice the entropy line down in the panel. It's already sitting well inside the green band, telling us the recent path is ordered rather than random. That's the permission we need. Now watch the third candle from the left. On the bar before it, price had pulled back and its close slipped down to touch the rising baseline. Then this candle closes firmly back above the blue line. That's the pullback reclaim the strategy is waiting for. An ordered regime, an uptrending baseline, a dip into the line, and a reclaim above it. That combination fires the buy entry marker you see here. The stop loss is placed below the entry at 1.8 times the average true range, and the take profit is set above it at 3 times the average true range, so the target sits wider than the risk. From there, price does the work. The next candles push higher, one after another, each closing above the last, while the baseline keeps climbing beneath them. A few bars later, the advance reaches the take profit target, and the long trade is booked at that first take profit marker. Notice the entropy stayed in the green band the whole way, so the ordered thesis held right through the move. Now the character of the chart changes. Near the 7th and 8th candles price stalls and rolls over. The blue baseline flattens and then begins to slope downward, so the trend has flipped to the downside. Watch the entropy again. It ticks up toward the threshold during that choppy turn, then settles back into the green ordered band as a clean move develops. Here comes the mirror setup. On the bar before the 10th candle, price bounces up and its close pops to the falling baseline. Then this candle closes back below the blue line. That's the short version of the reclaim. An ordered regime, a downtrending baseline, a bounce into the line, and a close that loses it. The sell entry marker fires. This time the stop loss sits above the entry and the take profit sits below, again using the same ATR multiples. Price then slides lower candle by candle, tracking beneath the declining baseline, until it reaches the lower take profit target and the short is booked at the final marker. 2 trades, one long and one short, each taken only because the entropy confirmed an ordered path first, and each joining the trend on a pullback that reclaimed, or lost, the baseline. That's the whole idea in a single picture. Remember, this is an illustration for learning, and real markets will not line up this cleanly. So that's permutation entropy regime trend. We covered how the Bant-Pompa permutation entropy reads the order or randomness in the recent price path, how the strategy only trades when that path is statistically ordered, and how it then joins the trend on a pullback that reclaims an exponential moving average baseline. We also walked through the ATR-based stop loss and take profit and the regime invalidation exit that closes a trade if the path turns random again. Remember, everything here is educational content only and is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses do happen. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MetaTrader 5 analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.